with gold at another record high. It's up. We're seeing it trading up more than 1% amid worries of slower global growth. Washington apparently, of course, nearing a deal to raise the debt ceiling. But traders buying into gold, they seem unconvinced that this is going to lead to a settled economy. For more, here's Jay Taylor. He's president of Taylor Hard Money Advisors, editor of miningstocks.com. Great to see you again, Jay.
Thank you, Andrew. Good to see you as well.
You're not convinced that this U.S. debt deal really gets down to what they need to be doing about cutting spending?
No, I think it's pretty much window dressing, Andrew. I think that, you know, from what I understand, and listening to David Stockman here in New York this morning, President Reagan's budget guru, he's sort of saying this is just sort of a bad joke. Basically, the Republicans are playing a game. The Democrats are playing a game. Everybody's playing a game, and basically the real cuts are almost minuscule. We're looking at $1 trillion a year over 10 years, and immediately, of course, they're going to bump up the budget ceiling that we're going to start spending another $1.5 trillion immediately. I think the markets understand this. I think the gold market understands it. At the same time, as you were saying, we have a very, very weak economy in the U.S. and in Europe, too, in general. So, you know, the markets are, I think, sort of anticipating QE3 probably and more debasing of the currency. So it's not that gold is going up. I think people need to realize that the price of gold is simply maintaining its purchasing power. Yeah, it may be gaining it relative to other things, a lot of other items, certainly relative to stocks. We had a 44-to-1 ratio at the peak of the bull market in stocks. It's now around 7.5-to-1. So gold is gaining, that's true, but its purchasing power over a long period of time it holds its own. And the dollar is quickly losing its value, the U.S. dollar especially.
Is gold still a good price? I mean, still a good buy. Where do you see it going for the rest of the year?
You know, I think, Andrew, until it's not the budget issue, it's the debt issue overall. It's not just government debt, it's the debt in the Western world. Until it reaches some level that's manageable, until it reaches some level that can be serviceable, I think we're going to keep seeing the same policy mistakes, the same stimulus is going to be pumped into the system, and that's extremely bullish for gold. So if you were to ask me, when do I think the bull market is over, and I think it will be over eventually, then I think we're going to have to see the global economy settle down. We're going to have to really see debt wiped off the books. And frankly, all the policymakers are doing now is prolonging the agony. They're kicking the can down the road, to use a worn-out phrase, but basically it's about, you know, letting someone else suffer the consequences. The problem with it is that every stimulus brings about more debt, and debt is growing much more rapidly than income is growing. So every stimulus brings us nearer and nearer to the precipice of some catastrophe, I'm afraid. And I think the gold markets, look, the central banks are saying we don't trust the dollar anymore. That's what Korea is saying, essentially. Putin and a lot of other people, the Chinese have been saying we need to go to a basket of currencies. We don't trust the dollar anymore. And why don't they trust the dollar? Because of the policies, endless amounts of money creation to try to bail us. It's just good old Keynesian economics. But I think the world is about to learn that Keynesian economics doesn't work very well long term.
You have a stock for a Sandgold, SGR. Why do you like that one, Jake?
Well, Sandgold's a company I've been following for a number of years, and I'm sure I talked to you about it in the past as well, but they've had their difficulties reaching production levels until they brought in George Prairie, who a former Placer Dome operations guy who really was one of their leaders. And since they brought him on now, they're more than hitting their numbers, and the problem they had before was they weren't pulling enough ore to feed the mill. Now they're pulling more than enough ore from their mine to feed the mill. But the real exciting story here, Andrew, is that they have some of the richest gold discoveries in recent times in Canada, and they're going to be drilling 300,000 meters this year. Prairie told me it's the most aggressive drill program he's ever seen on an individual property, and they're able to do it all for $25 million, internally generated financing of that. They're not going to have to issue more shares. But what's really exciting is they can drill from about as deep as a mile underground, and these are parallel structures, so they'll be able to drill very efficiently.
Jay, I'm sorry, I always do this to you. Got to cut you off because we're out of time. Thanks so much for joining us. Sorry to leave Jay so abruptly there. He always has so much to tell us. Jay Taylor, president of Taylor Hard Money Advisors and editor of miningstocks.com. I'll send him an email later. He's always so understanding.